If you'd like to know how reverse mortgages are going to work in the year of 2025, then this is the video for you. Now, just a quick hint, just so you know, this is not going to be a 5-minute video. I'm basically going over all of the changes that I've seen in the reverse mortgage world recently and how I'm kind of projecting these reverses to act in 2025. So strap in. I've got a glass of water here I'll be sipping from, so you can do the same. Get out a notepad and a pen. And of course, if you'd like to get in touch with me, my name is Jason Eichmiller. I'll truly introduce myself a little bit later, but my contact information is flashing below. You've got my phone number, my email address, and my website. And anything, if you have any questions about reverse mortgages and that this doesn't answer, or if you'd like to see how a reverse mortgage works specifically for you, go ahead and reach out. I'm always available by phone. Email, I normally respond within a day. And the website, well, I'll show you the website in a little bit. So, all right, on to the presentation here. So that is my ugly mug, and the topic of this is reverse mortgages in 2025. So let's get this ball rolling here. So what you're going to learn today, we've got a bunch of information to cover. Again, this is why this is not a 5-minute video, but if you're interested in a reverse mortgage right now, then you need to know exactly how these work and how they don't work, so you can start thinking, hey, can this work for me? Can this actually help me? And again, specific questions about your situation, feel free to ask. So we're going to go over higher loan sizes. Yes, the reverse mortgage loan sizes have increased in 2025 from 2024. There is a lower age than 62 for some reverses. There's a second reverse mortgage, which almost nobody has heard of, but it's, man, for folks with mortgages with low interest rates, it's terrific. The line of credit growth rate for reverses it's out of this world. We'll show Gary's situation. We'll talk about him and how his reverse mortgage line of credit is just growing like weeds, I should say. How you can use a reverse mortgage to buy your home, how you can use a reverse mortgage for a condo, even if you've been turned down for an FHA reverse before, or your condo association says, we don't deal with FHA. Most of these condo associations don't deal with FHA. We can still, in a lot of cases, do reverses on them. And then finally, one of my favorites, especially with home values increasing, the good old jumbo reverse mortgage. So that's our itinerary, if you will. But first, before we do that, we're going to go back to the very basics of reverse mortgages. So what's a reverse mortgage? Well, biggest picture is that many seniors want to live in their home for the rest of their lives, but they're worried that their money isn't going to last as long as they do. So that's a super high, it's like a 20,000 foot kind of view on reverses. That's the need, but let's go a little bit deeper. So a reverse, it's really just think about it. Don't overcomplicate it. Plenty of people do, but I'll tell you as a guy who's done these since 2008, all a reverse mortgage is it's just a regular mortgage where instead of being forced every single month for the rest of your life, or at least 30 years, instead of being forced to make payment after payment, you decide if you want to make payments or not. That's all it is. You as a senior, you continue, or your parents, if you're looking at this for your folks, you continue to own your home. You still have full ownership of it. You can make payments on it if you want. You can sell it if you want. You own the house, and it'll go to your heirs in the end. We just give you part of your home's value in tax-free cash, depending on how old you are. And the older you are, the more money you get, and the younger you are, the less money you get. Now, how can you take your money? You can get your money. Most reverses are incredibly creative, and that's what I like to do, is kind of put my thinking cap on and figure out, based on your situation, how can this benefit you the most? How can this do the very best for you? So you can get your money up front, in a lump sum, or in some cases 2 lump sums. You can get monthly income for life. I should have put income in there. Oops. Monthly income for life. You could actually do monthly income for a set amount of time too. So let's say you're 62 and you just want to postpone Social Security till 70. You could literally take a reverse mortgage money for just 8 years. So you replace Social Security. Then when you're 70, you get way more Social Security income than you would have at 62. So like little strategies. You can get a growing line of credit, which we're going to go deep into on Gary's situation, or any combination of the three. We call reverses the Swiss Army knife of retirement because really, in a lot of cases, we can really we can look at you and what you need it for, and we can mold the reverse around your situation as opposed to molding your situation around the reverse. So, and of course, finally, there are second reverse mortgages and jumbo reverse mortgages, which we're going to go over soon. So, more on reverses. They're terrific for seniors who want to live in the home for the rest of their lives, but money is tight, whether it's cash flow, you don't have enough assets in savings or investments. And some of the reasons why folks use reverses, and we'll go over a few of them, eliminate your mortgage payment, create a line of credit that grows in the future for expenses, pay for even expenses that you don't even know about. You're just creating another branch on your retirement money tree. To pay for health care, to help the grandkids. There's a bunch of reasons why folks fund a business. Did I already say that? No, I didn't. Fund a business. So there's a bunch of reasons why you can get a reverse, but in the end, it's just using your home equity to help your retirement. Let's talk about your heirs real quick, because a lot of people, if you don't have kids, you can just ignore this slide. It'll be quick. If you do have kids and you're worried about where your house is going, a reverse mortgage is just a lien on your home. Just like any other mortgage or HELOC, you owe the bank. We're on it as a lien because when you sell the house or when both of you pass away, we want to get paid back. So you have full ownership. You can sell it, pay it back, pay parts of it back, refinance it out at any time. There's never any prepayment penalties. And when you pass away, your house goes to your heirs. Whatever is owed gets paid back, and your kids get the remainder. And that final bullet point, which you can't see, is non-recourse. And that just means that you can't owe more than the house is worth. All right, so just so you know, your kids are protected in this program. All right, really quick about me. You've seen my contact information flash across the screen, so I don't want to go too deep into it, but that's my family. That's my wife, Bridget. Alyssa is my 14-year-old. Jason's my 13-year-old. And Molly is soon to be 11 in about a month or so. This is my contact information. You can reach me any way that you want to. I even have my cell phone number up there. Just don't call me at 2 a.m., please. I'd appreciate it. This is the website, www.reversequotes. So you can call me. That's the quickest way. If you want to email me, normally I get back to you within about a day, or sometimes a little bit less. You could also visit, if you want to schedule a time to talk, visit reversequotes.com. You'll see the form submit on the right if you're on desktop, and the bottom if you're on a mobile phone. And then if you want to see what other seniors feel about kind of how I've worked with them, then just scroll down, whether you're on desktop or mobile, and you'll see a bunch of testimonials and interviews that I've done with seniors that I've helped over the years. Here, now we are not going to harp about this. These are some testimonials. I'm going to show you a bunch of testimonials. Here's the deal. Just go ahead and push pause if you want to read through them. I don't want to take up too much time with these. So one is Hank, the other is Kevin, both clients. They're wonderful. How Kevin I actually did 2 reverse mortgages for. Hank I did, or Henry I did 1 for him. So again, pause it if you want to see. Now, let's talk about home value and loan size, which corresponds to it. So the HECM, what is a HECM? What the heck is a HECM, people ask. Weird acronym. HECM stands for Home Equity Conversion Mortgage. That's the government reverse. So with the government reverse, the HECM, the maximum home value actually increased from 2024 to 2025. And so you can see that it increased from 1.149 and some change to 1.209 and some change. So that's about $60,000, just under 60. What that means, excuse me, what that means in English is there is a maximum home value with these HECMs. So if your home is worth 1.2 million back in 2024, even though it's worth 1.2, they're only going to value it 1.149. Now in 2025, same $1.2 million house actually gets it valued at the entire amount, which means that your loan size is bigger. Because remember, with the reverse, we're giving you a percentage of your home value based on your age. Now, question you would have is, well, what if my house is worth, excuse me, what if my house is worth more than $1.2 million and I want to get all the cash I can get out of it? Well, then a HECM might not make sense, and we would do a jumbo, and they also call it a proprietary reverse mortgage. There's no maximum home value on those, and we're going to go over the jumbos in a couple of minutes. So now, I hope that made sense. By the way, if you have any questions, just comment them below or give me a shout, shoot me an email. I'm glad to answer absolutely every question that you have. Let's look at good old Donald. Donald's an aging Donald, but he's having a good time. Look at him with his Hawaiian shirt, or maybe that's is that a starfish on his shirt or a weird leaf? I like to think it's a starfish. His eyesight's going bad. He's missing an eye. Or he's just got the patch. So let's look at age, because Donald is aging a little bit. So with a HECM, yes, one of you, if you're married, one of you has to be 62 or older. If you're not married, you have to be 62 or older. There's no maximum age for these, by the way. The oldest person I've done a reverse for, she was 103. So HECM, 62. The jumbo or proprietary reverse, though, 55. So this is where I'm saying that it's a younger age. It's 55. Some people know this, by the way. Some people don't. So that's why I'm kind of communicating this to you right now. Now, the only thing is you can't have, and by the way, you see NBS for HECM. That stands for non-borrowing spouse. You can have a non-borrowing spouse with a HECM. You cannot have a non-borrowing spouse with a jumbo reverse mortgage. There's actually one investor who might allow it, but then you got to jump through like 17 hoops. So if you're in that case, give me a ring. We'll talk about it and we'll see if that's something that you can do or not. And by the way, with all this, it should be, if you've been with me for a while, you should know that if you can't do a reverse, if it doesn't make sense for you, I'm not going to sugarcoat anything. I'll be nice, but I'll let you know as soon as I understand that you can't do it or it doesn't make sense, because I don't want to leave you thinking that, wanting to get something and not being able to in the end. That just wastes time, and I am not a time waster. All right, so let's talk about the second reverse mortgage. A lot of folks don't think that you can get a second. A lot of folks think that, hey, if I have a low rate first mortgage and I want some cash to be able to get it, I've got to pay off my low rate first mortgage and then I'll get the cash, but then they're losing their 3% or 2.5% interest rate. So the second reverse was really built for folks who have low interest rates and aren't having a problem with their first mortgage, but they still want to get some cash out as a second, and most importantly, they don't want to make any monthly payments on it. So let's talk about Jerry and Bill. We'll go over them. Jerry and Bill, they're in their mid-60s. Their house is worth about just under 1.3, so 1.285. Their mortgage is $370,000. Their rate's low, though. It's just 3%. They're doing okay. They don't want to pay it off. They've got enough cash flow. Their fixed income is enough. But they do have some high-interest credit cards and bills. So they need the money to pay off those bills. They want to leave the first alone. So traditionally, if they didn't know about the second, then they would have done a regular reverse, and that wouldn't have really been, it'd have been all right. It would have helped them a little bit, but it wouldn't have been the absolute best thing for them. Remember in the beginning I said I'm gonna use my resources and try to mold this program around what you need it for. This is doing exactly that. So how the second reverse helped Jerry and Bill. We left their first mortgage alone. You already know that. We gave them $248,000 and some change in extra cashola, and they used it to pay off their high-interest credit cards, paid off their bills, threw it into savings, and of course, as you already understand, just like any other reverse mortgage, they don't have to make principal and interest payments on that second reverse. However, just so you know, Jerry and Bill do have to continue to pay their first mortgage, their property taxes, and their homeowners insurance. And if you have an HOA, you've got to pay the HOA as well. So this is in red. It's very dramatic. Anytime I write something in red, it's dramatic. Jerry and Bill are financially stable and the weight is off their shoulders. But all jokes aside, the weight is off of their shoulders and they feel so much better about life now. So hooray, second reverse mortgage. So some reasons why you would get a second reverse: pay off high interest credit cards or debt, home improvements to age in place, a large purchase. And one thing that you should know about this, I'll go to the next slide. One thing that you should know about the second reverse also is that it doesn't have a maximum home value. So I'm out here giving second reverses to folks in $2, $3, $4 million homes. Get a second reverse, and if you have a $10 million home, it doesn't matter. So there's no maximum home value, and thus you can get a decent amount, a decent chunk of change through the second. And again, most importantly, leave that first alone. Other reasons to get a second: fund, grow your business. We touched on business loans before. Help family members out. Get a second at a fixed rate instead of an adjustable HELOC, which, who knows? I think rates are going to go down, but ain't nothing promised. So just to get it fixed so the rates don't go up. And of course, as you understand, very redundantly saying, I apologize, no mortgage payment is required. So this is Jerry's testimonial here. Again, very short. She was terrific to work with. So there you go. If you want to read it in full, go ahead and push pause. But we are off to bigger things like the jumbo reverse mortgage. So again, if your house is worth over 1.2 or so, and you want to get all the money out of it, then we've got to look outside of the FHA. We'll do a proprietary or a jumbo reverse for you. Just got a sip of water, and it went down the wrong pipe, of course. So excuse my coughs, I apologize. All right, let's talk about Dan and Dan's deal. How about that? So, sorry again. Dan's 59, too young for a regular reverse, but he's got a high monthly payment on his current mortgage. His house is valued pretty decently at almost $3.5 million. He owed $671 on it, and the mortgage payment was almost $4,500 a month. It was hurting him, man. It was a strain on his income. He does have other investments, but he doesn't want to drain them. And really, when we did a financial worksheet together, he asked for one. He wanted to see kind of what was going in and what was coming out and have it all written down. So if you need a financial worksheet, just let me know and we'll do it together. He was really tight. And the other thing that Dan wants to do besides improve his cash flow is he doesn't know if he wants to be in the house forever. And he saw that larger homes than his were selling at a heck of a lot more. So he wanted to kind of build his property out, expand it. He has the lot space, and building codes in his area aren't too terrible. So he's able to do that. And thus he's playing, I mean, yes, by making a bigger property, it's better for him to live in now. But the money that he spends, it's basically he's playing cash arbitrage. The money that he puts in, he's going to get a lot more out by building it to a bigger property. I hope that makes sense. I hope I explained that right. Basically, he wants to expand the house. So if he sells it, he can go get a heck of a lot more money when he sells it, if he decides to. So what did we do for Dan's jumbo reverse mortgage? I only have a few bullet points. It's so simple. We paid his mortgage off, saved him almost $4,500 a month. That was terrific for his cash flow. Then we gave him $456,100 and some change in tax-free cash to expand his home. And of course, as we know, we understand he doesn't have any monthly payments, and he can sell whenever he wants. But in the meantime, Dan is financially stable. He's financially comfortable. He's in the home that he loves, that he wants to be in, with the option to sell later on. So this was absolutely perfect for Dan. So let's look real quick at the proprietary reverse mortgage versus the HECM. I've got 2 slides on this. We'll go through them quickly. As you know, with the proprietary, you qualify at age 55, not 62. If your house is worth over 1.2 and you want to get all the money out of it, you get a proprietary. If you need all the cash right away, even if let's say you have a $300,000 house or 200, whatever, any value home, and you want all the cash right away, then you're going to do a proprietary / jumbo reverse, because when you have a HECM, if you're free and clear, normally they just give you about 60% right away and you get the rest after a year. That's okay for most people, but if you need all the money right away, then do the jumbo, do the proprietary, get it all, get exactly what you need out of it. Again, we're talking about molding, this is a theme, we're talking about molding this program around you and what you need it for. If you have a high credit score but low income, I have one investor that doesn't look at income at a 720 credit score. I have another investor who's They underwrite it a little bit easier. They're looking for a 780 credit score to not look at income. So just again, depends on your situation, and that's how I kind of find. I don't think of who's going to be the investor or what program we're going to do until we speak. So the HECM, where's the HECM an advantage? Credit line growth, monthly income, retirement safety net. Again, that goes more back to the credit line. But when we think of using the reverse as a Swiss Army knife, that is the HECM all day long, because we can get monthly income. We can get a combination of money up front, monthly income, credit line, so we can really, really, really be creative with it. The proprietary is less creative, but it more fulfills a need. So next we're going to look at some niches, some reasons why you would get a proprietary. Again, a proprietary is the same thing as a jumbo, by the way. I should have written jumbo. It'd be less typing to do. Home health care if you need all the money right away. Fund to business if you can see all this stuff is if you need the money right away. Home health care, fund to business, expensive home repairs. I should say home health care is kind of 50-50, depending on how much the home care is. Maybe a HECM works for it, maybe a proprietary. Just depends on your situation. Limit high balanced unsecured bills. Basically, if you need more than $300-something thousand right away, then you're going to look to a proprietary and buy an investment property. That's probably going to be a proprietary reverse as well. All right, so that was the jumbo reverse mortgage. So we're flying through this thing. We're halfway through. I think the back end is a little bit quicker anyway. So this is going to be all about the reverse mortgage credit line. If you've watched my other credit line videos, you know how bullish I am about this and how my clients and my financial advisors and CPAs that I work with, once they understand how the reverse mortgage credit line works, man, it's unbeatable. It's the best program out there. All right, let me prove it to you. So we're going to talk about Gary and Gary's situation. So talking about how he uses home equity to create an unbeatable retirement safety net. And when I say unbeatable, there's a little pressure. I've got to prove it to you. So I'm going to try to. You let me know. Let me know in the comments if you think that the reverse mortgage line of credit is unbeatable or not. So this retirement safety net, it is guaranteed to grow tax-free as long as you live in your home, right? So most home equity lines of credit, HELOCs, they'll give you a line of credit, but it'll only be for 5 years or 10 years or so, and then it ends. This is forever. If you set up the reverse mortgage line of credit at 62, it's going to last as long as you do, even if you live to be 100 or older. It never ends, and it always keeps growing, which is entirely unique in the line of credit world for anything. So some future expenses that you can kind of project this line of credit out for, even though you don't have a need for it right now. Home health care, emergencies, inflation, increased cost of living. We're going through that right now. Inflation isn't over. Travel, vacations, weddings, the fun stuff, right? We're basically creating another branch on your retirement money tree to use down the line for when things like this come up. Property taxes, homeowners insurance, that's another. You can probably think of a few. So how does it work? Many seniors want to live in their home for the rest. You already saw this slide. They want to live in their home for the rest of their lives, but they haven't saved enough to make it all the way through retirement. So let's take a look at, this is Gary's situation again. Gary came to me, his house was worth a little bit under 1.05. He was free and clear, still working. He's a saver. He has no debt. He's doing everything right. He's got money saved, but when he retires, he wants to continue his same lifestyle. And who knows, he might need help, he might not. But there was no downside to creating this reverse line of credit. So you can see where this little oval is, and that's the line of credit. So you can see that at a 1.045, whenever we started the reverse, which was back in the summer or so of 2024, so a few months ago, the line of credit started at 330. After 10 years, and these are just projections, by the way, so it'll go up and down based on the 10-year CMT. If you want to know about, I'm not going to go deep into interest rate indexes because it's a little bit A little bit too minute for this or too detailed for this video, but if you want to know all about that and how the indexes we go off, then just drop me a note or write a comment below and I'll share it in the comments. But 330 starts off with 10 years in, projected to be 647. 15 years in when he's 77, projected to be 906. 20 years in, it's 1.269. If he turns 92, let's say 30 years in, what do I have here? 2.489. And when he hits 100, I'm betting on this guy. Gary's a great, great guy. I think he's around forever. He hits 100. He hasn't tapped anything out of the line of credit. $4.265 million in tax-free cash that he can take. And here's the thing. He can take that $4.2 million no matter what his house is worth. So if home values dropped, he can still take it. So he was ecstatic to get the reverse. And again, this was just all about the reverse line of credit. So here's his testimonial letter to me. Again, push pause and read it. It's very, very positive. But you can tell by reading it that he's kind of a finance guy. And that's why he thought this was so smart and so awesome for him. So take a look at it. And if you want to know about this one, then feel free to reach out. But it is so, so powerful. Water break. Okay, but I swallowed it all. It did not go down the wrong pipe this time. I'm learning. So, but what if you don't want to stay in your house for the rest of your life? What if you want to move? What if you need to downsize? Call it forever sizing. So talk about how you can use a reverse mortgage to buy your forever home. So generally you're going to purchase to either downsize, move closer to your grandbabies, or move into a 55 and older community. So I've seen these as the main reasons why people buy their home, why seniors basically move and buy their home. So how do you pay for it? So there are two options. One is to pay all cash. That's great. You don't have a mortgage payment, but paying all cash, a lot of financial advisors get nervous because you're really draining, depending on how much you have. If you have just $1 billion, then number one, if you have $1 billion, buy me a case of beer. Number two, if you don't have that much money, then paying cash for a house really kind of puts you out a little bit. It creates a big strain on your retirement money, and then you have so much less in the piggy bank. So that's paying cash. The other is getting a mortgage. So you don't have to put much down on a mortgage as long as your debt to income is okay. But these mortgage payments, as you know, if you have a mortgage on your house right now, mortgage payments put a strain on your fixed income. It's tough. So we've got the reverse mortgage line of credit, which ends up kind of being a tweener between paying all cash and getting a mortgage. Hint, of course, there's no mortgage payments. So let's talk about Al and Marilyn real quick. They're in their early 70s. They needed to downsize from their two-story to a rancher. They didn't want to buy all cash because it would just be too much on their investments, like we talked about. They didn't want a mortgage because they're on fixed income. And I think they could have afforded mortgage payments, but it made them really, really uncomfortable. They wouldn't have like any cash flow left over. So here's what we did. Al purchased, and Marilyn, of course, purchased a new construction home for $537,000. He put down $355,000, or just under 2/3 of the purchase price. So he had a sizable amount that he put down, but he still saved over $180,000. Of course, because this is a reverse, he doesn't need to make principal and interest payments. So no mortgage payment to make, but of course he does have to pay the property taxes, homeowners insurance, and this one had an HOA, but he was fine with that. He could afford that. And we structured this the right way. So if Al decides to make mortgage payments, he's actually going to open up a line of credit. And then you can look back to Gary's line of credit projections to see the potential growth that Al will have. Honestly, he's probably not even going to make the payments. He told me the money's better in his pocket than some banks, but it's nice to know that if you do want to make payments, then it'll open up that line. So that's it. Reverse mortgage line of credit. If you're looking to downsize, looking to buy, then it's a tremendous program. All right, I think this is the last one. Let's go over reverse mortgages for non-FHA condos, which basically means reverse mortgages for condos because most of the condos aren't FHA eligible. So special needs for condos. All right, there's a few. Number one, condo, besides all the other stuff, besides all the other reasons for getting a reverse mortgage, which we went over before, but condo owners, they've got a pretty big problem. Condo fees are increasing annually. The assessments, I've seen six-figure condo assessments, especially for ones on the beach now. They're pricing people out. Like, they can't afford the assessments. So they're going to have to sell, and then where are you going to go if you sell? And of course, high interest bills and afford retirement, that's just regular reverse mortgage stuff. But those condo assessments and the condo dues are really, really out of control. So people need to do a reverse mortgage on their condo, but there's a problem. A big problem. And now my computer's freezing. Okay, it stopped freezing. Let's see here. There we go. So if you need to get an FHA, so in the past, we would have to petition FHA to approve the condo, and you have to fill out this 3-page form, and it's just ridiculous. And in the end, get all these requirements. I'll push pause if you want to look at them. They're just terrible to get. It takes forever. It must be perfect. Your condo association doesn't want to do it anyway. They charge you some money, and not surprisingly, over 90% fail. So traditionally, getting a reverse on a condo is kind of like the kiss of death. But now I've got a lender who approves non-FHA condos, and they do it very, very quickly, and it's easy. About a little over 90% of the condos that I've presented to them have actually been approved. So you remember the 3-page approval form and all the documents that they need. Here's this approval form that I need. It's 15 questions. They've got to answer everything true. And then I need a copy of the condo master insurance policy and just another form stating that you've been on time with your condo payments for the past 2 years. So by the way, if you want this form just to see if your condo will be eligible, it probably will be, but feel free to reach out to me or comment below on the video, and I'll go ahead and I'll shoot it over to you. So other information about the condos is the minimum age is not 62, it's 55, because again, it's a jumbo or proprietary reverse. There's no mortgage insurance charge, so the closing costs are lower. And there's a lot of other proprietary reverses or jumbo reverses, they're jumbos. They require a minimum home value of either $450 or $600. Some even have up to $1 million. This one, I've literally done this for condos in the $100,000 range. I don't make a lot of money off of it, but that's okay. Like, it really, really helps people. So, by the way, on these, we lend up to $4 million. So if you're sitting on a $10 to $12 million condo, and you need some big bucks out of it, there you go. The max right now is $4 million, and there's one lender that'll allow you to put in a petition to get a little bit more. Does it work? Sometimes it does. It just depends. The investor has to be comfortable with it. So what we're going to do in this process, by the way, because a lot of people come to me because they've already tried to get their condo approved through the FHA, but it just didn't work out. We're going to get the condo forms filled out up front, so you don't have to pay for an appraisal or counseling until the condo is approved. So it really, really saves. It's a lifesaver for folks. And this, by the way, this is Bob's review. He's in South Carolina. He, just like I was saying, he got turned down by other reverse mortgage companies. And I'm not saying that I'm the greatest thing since sliced bread, but I've got the resources. I've got the reverse mortgage companies there's only one that makes it easy on you, but they do make it really, really easy on you if you live in a condo and you're looking for a reverse. So push pause, read Bob's testimonial if you'd like. All right. Let's go to the bottom line here, and maybe we can see me. Can we see me here? All right, here we go. There I am. I'm back. All right, here's the bottom line in all of this, right? By using your home equity to supplement your retirement, you have a far better chance of your money and your life, right? Of your life lasting through retirement, because nobody wants to eat. I don't want to be dramatic, but nobody wants to eat. You're not eating cat food through retirement. You have a certain standard of life, and this retirement, this is going to be a cliche, but your retirement, it should be your golden years. It's not the bronze years. You shouldn't be scraping by. And I know there's only so many branches on the money tree, and once you used everything, it's out. But just using your home, There's so many folks right now who they have so much equity in their home and they just haven't used it. They haven't utilized it. So this is a way to use your home to stay at home, which makes me really, really happy about it. All right, I'm gonna get off of me real quick. You can see a couple more testimonials here. Yes, you can push pause. That's Michael, that's Chuck, that's another Mike, and Dana, my good friend who helped her dad. So more testimonials. Again, you can push pause if you'd like to read through them. But another testimonial, Teresa. Man, I'm laying it thick on thick today. I've got all the testimony. Actually, not even close. I've got a number of testimonials out here for you. So that's it. If you'd like to learn how a reverse mortgage can work for you and if it can help you, then man, I'd be glad to help. I'll give you all the information. We'll look into your exact situation and we'll figure out, hey, can you qualify for this and can it help you? And if you can qualify and if it can help you, then I'll do my absolute best to help. Again, my name's Jason Eichmiller. I own and run Reverse Mortgage Reality and Key Home Lending. And you can probably tell, but it would be a blessing to help you. The folks that I have helped over the years, they've kind of become friends. I get Christmas cards, holiday cards. I run into one guy that I've helped locally here at church. Not too often because we don't go to church as much as we should, but it's great. It's great seeing his face and just hearing from my clients. I get calls every couple days. I'll get a call or an email from my clients just letting me know how they're doing. So it's really neat seeing how this little program, and that's all it is. It's a tool. It's a mortgage. It's nothing too fancy, but the way you can utilize it and the way you can kind of strategize it and structure it, it's really cool. It's a game changer for folks. So that's all I got to say. If you need me, go ahead and reach out. You can see my contact information is below, 888-309-9705. You got my cell phone, 443-802-5923. Email me, jason@keyhomelending.com, or you can visit reversequotes.com if you'd like to schedule a time to chat, or if you want to see some other testimonials and videos of the folks that I've helped. All right. Thank you so much. I appreciate you more than you know. And if you need help, I'm here. Take care of yourself.